Welcome! Today we're breaking down the concept of insured status in Social Security. If you've ever wondered what it means to be insured for Social Security benefits, you're not alone. Many people find this term confusing, but it's actually a straightforward idea once you know the basics. In this video, we'll explain what insured status is, why it matters, and how it affects your eligibility for different Social Security benefits. We'll also walk through the types of insured status, how credits are earned, and what you need to qualify. Let's get started by understanding the foundation of Social Security and why insured status is so important for your financial future. Before diving into insured status, let's quickly review what Social Security is all about. Social Security is a government program that provides financial support to people who are retired, disabled, or survivors of deceased workers. It's funded through payroll taxes that most workers pay during their careers. The money you contribute helps you and your family qualify for benefits later on. Understanding how Social Security works is key to grasping why insured status matters. Now, let's look at how your work history connects to your eligibility for these benefits. In Social Security terms, being insured doesn't mean you have an insurance policy like car or health insurance. Instead, it means you've worked and paid enough into the Social Security system to qualify for certain benefits. The Social Security Administration keeps track of your work history and the taxes you've paid. If you meet specific requirements, you're considered insured and can receive benefits for yourself or your family. Let's explore how you earn this status and what it takes to be considered insured. To become insured, you need to earn Social Security credits, sometimes called quarters of coverage. You get credits by working and paying Social Security taxes. In 2024, for example, you earn 1 credit for every $1,640 in wages or self-employment income, up to 4 credits per year. These credits add up over your working life and are the building blocks for your insured status. The more credits you have, the more likely you are to qualify for different Social Security benefits. Next, we'll see how many credits you actually need. There are 3 main types of insured status in Social Security: fully insured, currently insured, and disability insured. Each type has its own requirements and determines which benefits you may receive. Fully insured status is needed for retirement and most survivor benefits. Currently insured status is mainly for certain survivor benefits, and disability insured status is for disability benefits. Understanding these categories helps you know what you and your family might be eligible for. Let's break down each type in more detail. To be fully insured, you generally need 40 Social Security credits, which usually means about 10 years of work. Once you reach this status, you're eligible for retirement benefits and most survivor benefits. The 40 credit rule applies to most people, but there are exceptions for younger workers. Being fully insured is the gold standard for Social Security eligibility. Next, we'll look at what it means to be currently insured and how it differs from being fully insured. Currently insured status is less demanding than fully insured. You need at least 6 credits in the 13 calendar quarters before your death. This status is mainly important for certain survivor benefits, like a one-time death payment to your family. It doesn't qualify you for retirement benefits, but it can help your loved ones if something happens to you unexpectedly. Now, let's move on to disability insured status and see what it takes to qualify for disability benefits. Disability insured status is a bit more complex. To qualify for Social Security Disability Insurance, SSDI, you need a certain number of credits based on your age when you become disabled. Generally, you must have worked recently and for a specific length of time. For example, if you're 31 or older, you usually need 20 credits earned in the 10 years before your disability. Younger workers need fewer credits. This ensures that only people who have been working recently can receive disability benefits. Let's talk about how Social Security credits are calculated. Each year, the amount of earnings needed for 1 credit may change due to inflation. For 2024, it's $1,640 per credit. You can earn up to 4 credits per year, no matter how much you earn above that threshold. The Social Security Administration keeps a record of your earnings and credits, so it's important to check your Social Security statement regularly to make sure your work is being properly credited. Insured status is crucial because it determines whether you and your family can receive Social Security benefits. Without the right number of credits, you might not qualify for retirement, disability, or survivor benefits. This status protects you and your loved ones financially in case of retirement, disability, or death. That's why it's so important to understand your insured status and keep track of your credits throughout your working life. The Social Security Administration, SSA, is responsible for tracking your credits. Every year, your employer reports your earnings to the SSA, and the agency updates your record. You can check your progress by creating a My Social Security account online. This lets you see how many credits you've earned and whether you're on track to become insured. Staying informed helps you plan for the future and avoid surprises when it's time to claim benefits. To check your insured status, log into your My Social Security account or review your annual Social Security statement. These tools show your total credits, your earnings history, and your estimated benefits. If you spot any errors, contact the SSA right away to correct your record. Keeping your information accurate ensures you'll receive the benefits you've earned when the time comes. If you haven't earned enough credits yet, don't worry. You can continue working and paying Social Security taxes to build up your credits over time. Many people reach insured status as they progress through their careers. It's never too late to start tracking your progress and making sure you're on the right path to qualify for benefits in the future. Younger workers don't always need the full 40 credits to qualify for certain benefits, especially disability or survivor benefits. The Social Security Administration has special rules that lower the credit requirement for people who become disabled or die at a young age. This helps protect families and individuals who haven't had time to build a long work history. Let's look at an example to see how this works in practice. Imagine a worker who becomes disabled at age 25. Instead of needing 40 credits, they might only need 6 credits earned in the 3 years before their disability. This rule ensures that even younger workers who haven't had time to build a long work history can still qualify for disability benefits if something unexpected happens. The SSA adjusts requirements based on your age at the time of disability. Survivor benefits are payments to your family if you pass away. To qualify, you usually need to be fully or currently insured. The number of credits required depends on your age at death. These benefits can help your spouse, children, or even dependent parents. Insured status ensures your loved ones have some financial support if the unexpected happens. To receive Social Security retirement benefits, you must be fully insured, which usually means 40 credits. Once you reach this milestone, you can claim retirement benefits as early as age 62. The amount you receive depends on your earnings history and the age at which you start collecting benefits. Insured status is your ticket to a more secure retirement. Disability benefits require you to be disability insured, which means you've worked recently and earned enough credits for your age. The Social Security Administration checks your work history to see if you qualify. If you meet the requirements, you can receive monthly payments to help cover living expenses while you're unable to work. Your work history is the foundation of your insured status. The more years you work and pay Social Security taxes, the more credits you earn. Even part-time or seasonal jobs can help you build credits, as long as you earn enough each year. It's important to keep working and contributing, especially if you're close to reaching a new insured status. If you're self-employed, you still earn Social Security credits by paying self-employment taxes. The process is similar to traditional employment, but you're responsible for reporting your income and paying both the employer and employee portions of Social Security taxes. Make sure to file your taxes accurately to get the credits you deserve. Military service can also help you earn Social Security credits. Active duty service counts towards your work history, and you may even receive extra credits for certain periods of service. The Social Security Administration recognizes the contributions of military members and ensures their service is reflected in their insured status. If you've worked outside the United States, you might still be able to earn credits towards Social Security through international agreements called totalization agreements. These agreements help people who split their careers between the US and another country avoid losing benefits. Check with the SSA to see if your foreign work counts toward your insured status. Your insured status can also affect your family. Spouses, children, and sometimes even parents may be eligible for benefits based on your work record. The more credits you have, the more likely your family can receive support if you retire, become disabled, or pass away. It's another reason to keep track of your credits and insured status. It's possible to lose your insured status if you stop working for a long period and don't earn enough recent credits, especially for disability benefits. However, once you're fully insured for retirement, you keep that status for life. For disability and survivor benefits, staying active in the workforce is important to maintain your eligibility. If you lose your insured status, you can regain it by returning to work and earning more credits. This is especially important for disability and survivor benefits, which require recent work. Keep in mind that credits don't expire, but you need to meet the recent work test for some benefits. Staying engaged in the workforce helps you maintain your eligibility. If you're considering early retirement, remember that you must be fully insured to claim Social Security benefits. Taking benefits early can reduce your monthly payment, but your insured status remains the same as long as you have 40 credits. Plan carefully to make sure you're maximizing your benefits and protecting your financial future. Spouses may be eligible for Social Security benefits based on your insured status, even if they haven't worked enough themselves. As long as you're fully insured, your spouse can receive benefits when you retire, become disabled, or pass away. This can provide important financial support for families with one primary earner. Even if you're divorced, your former spouse may be eligible for benefits based on your insured status, provided the marriage lasted at least 10 years and other requirements are met. This rule helps protect people who spent years out of the workforce supporting their families. Your insured status can have a lasting impact, even after a divorce. Children may also receive benefits based on your insured status if you become disabled or pass away. This support can help cover living expenses and education costs. The number of credits needed depends on your age and work history, but the goal is to provide a safety net for families facing difficult times. A one-time lump sum death payment may be available to your family if you're currently or fully insured at the time of your death. This payment is usually $255 and is meant to help with immediate expenses. It's a small but important benefit for families dealing with loss. Non-citizens who work and pay Social Security taxes in the U.S. can also earn credits and become insured. As long as you have a valid Social Security number and meet the credit requirements, you may qualify for benefits, even if you're not a U.S. citizen. The rules can be complex, so it's important to check your eligibility with the SSA. Some government workers don't pay Social Security taxes on their earnings, but may still qualify for benefits through other programs or by combining Social Security credits with other work. The rules can be different for federal, state, and local employees, so it's important to understand how your job affects your insured status. Teachers in some states don't pay into Social Security, but may still be eligible for benefits if they have other work that earned credits. If you've worked in both Social Security covered and non-covered jobs, your benefits may be affected by special rules, like the windfall elimination provision. Check your record to see how your teaching career impacts your insured status. Railroad workers have a separate retirement system, but some may still qualify for Social Security benefits if they have enough credits from other work. The Railroad Retirement Board and Social Security Administration coordinate benefits for people who have worked in both systems. It's important to understand how your work history affects your insured status. Homemakers who haven't worked outside the home may not earn their own Social Security credits, but can still receive benefits as a spouse or survivor if their partner is insured. This provides important protection for families where one person stays home to care for children or relatives. Students who work part-time can earn Social Security credits, even if they're still in school. These credits count toward their future insured status and can help them qualify for benefits later in life. Starting early is a smart way to build a foundation for future financial security. Gig workers, like drivers or freelancers, are responsible for paying self-employment taxes to earn Social Security credits. It's important to report all your income and pay the correct taxes to ensure you're building your insured status. Many gig workers overlook this, which can affect their future benefits. Part-time workers can still earn Social Security credits if they make enough money each year. Even if you're not working full-time, your earnings can add up over time and help you reach insured status. Every bit counts towards your future benefits, so don't underestimate the value of part-time work. Seasonal workers, like those in agriculture or tourism, can also earn credits as long as their annual earnings meet the threshold. It doesn't matter when you work during the year, what counts is your total earnings. Seasonal jobs can be a valuable way to build your insured status over time. If you have more than one job, all your earnings are combined to calculate your Social Security credits. This can help you reach the annual maximum of 4 credits more quickly. Make sure all your employers are reporting your earnings correctly so you get full credit for your work. Social Security credits are earned through payroll taxes, which are automatically withheld from your paycheck if you're an employee. If you're self-employed, you're responsible for paying these taxes yourself. Proper tax withholding ensures you're earning credits and building your insured status for the future. Understanding your insured status is a key part of retirement planning. Knowing how many credits you have and what benefits you're eligible for helps you make informed decisions about when to retire and how to supplement your income. Stay proactive and check your Social Security statement regularly. There are many myths about Social Security insured status. Some people think you need to work continuously or full-time to qualify, but part-time and seasonal work can count. Others believe credits expire, but once earned, they're yours for life. Understanding the facts helps you make better decisions for your future. To maintain your insured status, keep working and paying Social Security taxes, even if it's part-time or self-employment. Check your Social Security statement regularly to ensure your credits are being recorded correctly. If you spot errors, contact the SSA right away. Staying proactive helps you protect your benefits. In summary, insured status is the key to unlocking Social Security benefits for you and your family. It's based on the credits you earn by working and paying Social Security taxes. Whether you're aiming for retirement, disability, or survivor benefits, understanding and maintaining your insured status is essential. Stay informed, keep track of your credits, and plan ahead to make the most of your Social Security benefits.